Hello, I'm the 3 Money Hits guy. In this video, I'm going to give you 10 tips on how to invest in real estate. I will talk to you about the prerequisites to get there, the levers that make a building pay off in the long term, and the action that should not be neglected and which make all the difference between a profitable project and a financial nightmare. As you will see in this video, the adage that says, "It takes money to make money," is especially true when it comes to your first real estate investment. In business, you can start with zero, but not with a real estate investment. However, it is one of the most guaranteed ways to get rich in the long term. First of all, you have to understand that a building is always bought with a loan. Banks that may be willing to lend to you will want to check your reputation as a borrower first. This is why you have to plan 5 or 6 years in advance and apply for 2 different credit cards. The trick here is to use up every month, no matter how much you spend, and make sure you always pay off the full balance at the end of each month. After a few years, you will obtain an excellent credit card rating, which will be the proof that lenders are looking for that you are a good borrower. This will not only allow you to be successful in obtaining a mortgage, but also and above all, to obtain a good interest rate related to this debt to be repaid over several years. Another item a lender will look at is your annual salary for the last 2 years. So you must have a stable income for at least 2 years and show that you have some income stability for the future. If you are self-employed, the lender may be looking for a longer history of income. The lender wants to make sure that you have a sufficient level of income for the mortgage you will have to pay. He wants to make sure that the cash outflows related to your real estate investment will not exceed 30% of your annual gross income. He wants to confirm that the amount of the mortgage you ask him, which is on top of your other debt, does not generally exceed 40% of your annual income. The bottom line for the income aspect is not to overlook the importance of showing a year or 2 of really good income. If there is a time in your life when it's good to work overtime at your job, then this is the time. Finally, you should expect that the lenders will ask for a down payment ranging from 5 to 20% of the value of the building to be financed. So it will not be a good idea to spend all the additional income that you will have generated in the last years. You usually have to think about a few years of saving to be able to pay the minimum amount of the cash down required by lenders. The most effective way to do this is to create a separate bank account that you transfer to every month. As soon as you achieve a good credit rating, completed your years of hard work, and build up a good saving fund, go get pre-qualified for a mortgage. This will allow you to know what is the maximum price of the building that you can now buy. You need to obtain the best conditions, and that is why at this point the best practice is to present your file to several lenders to put them in competition and thus find the best. You will have to authorize a credit investigation for each lender who will study your file, but have no fear, your credit rating will not be greatly affected at this stage by these different steps, and you will be extremely successful in the end. By knowing your pre-approved loan amount, you can now start your hunt. Whether online or with the help of a real estate broker, the first advice at this level is to look for a building in a city or a neighborhood that you know well. Just like an entrepreneur should embark on an area he knows and masters. At this point, you need to project yourself into the future and ask yourself which residential areas will be the most sought after in the future. You must be located in an up-and-coming neighborhood so that the long-term prospect of finding tenant is good. To confirm your perception, another tip at this stage is to go talk to some residents and retail business owners in the area. In your building tours, identify things that make buyers hesitate before going ahead with this property or things that could add significant value to the property. For example, changing the kitchen, painting some walls, redoing the interior design, or adding some technological elements. The trick is to find a major element that will make the building attractive to several tenants and which will charge an insured monthly rent for several years. You don't have to look for a building where you will have to carry out several major renovations. In general, you will only need to find one element that will have a big impact. When you've found it, it's time to do some analysis. You need to come to a situation where your annual cash outflows will not be greater than your cash inflows. This is called being cash flow positive. Sit down to calculate how much rental income you expect to get and how much money you plan to pay as expenses. Electricity, taxes, interest, and maintenance costs. The cost of your renovation will surely be funded by your lender, but you shouldn't forget your mortgage payment in your cash outflow, even if it includes a good portion of principal repayment. It's not enough that your income is greater than your expenses. Your cash inflows must be greater than your cash outflows. If you come to that conclusion, you can make an offer. Since the previous step has enabled you to know the exact value to pay to get your desired return, you can easily set the price offered to the buyer. Never go higher than your calculations tell you. You have to know how to control your emotions in the game of negotiation, and especially the excitement of obtaining a property that you have visited and evaluated. If the seller doesn't accept your price, just look for another opportunity. Don't worry, there is always another. If after 10 offers on different buildings you never come to an agreement, it may be time to revise your desired return. On the other hand, if your first offer is accepted, you may have left a lot of money on the table. That's why you have to prepare to bid a lot to gain experience and get a real deal. When you come to an agreement, you need to confirm your cost estimates. Do an inspection and especially ask several construction contractors to bid on the work to be done. You may be surprised at the great disparity between the different submissions received. If they all come to the same cost, you will have confirmation that your price paid for the work will be correct. However, always expect to have surprises in the course of renovations. This is why you must add 15 to 20% of the expected cost to the price offered by the best bidder. There are several sites online that allows you to find the construction contractors who are the best rated by their clients. Take a look if you don't have a friend or family member's referral. Here's another tip. During the allotted time for inspection and financing, take the opportunity to place a classified ad online or in a local newspaper to see if there are many potential tenants who match your rental housing offer. If you ever receive any calls and the transaction now seems too risky for you, you can always find a way out of your promise to purchase by pretending that you could not obtain the requested financing. If the answer is very positive, this will allow you to confirm your perception of the real level of interest in a property like yours and to reassure yourself before the closing date. All you need to do now is to put your signature on the contract. There you go! Your adventure begins and your money starts rolling. If you find value in this video, please hit the like button. And if you find yourself more ready to invest in real estate as a result of listening to this video, please let me know by email or in the comment section. I'm the 3 Money Hits guy. Thank you for listening.